Hey, good afternoon, everyone. Thanks for coming in this afternoon. This is Mark from Right Line Trading, and I want to introduce you to our Trade Analyzer, or Trade Scanner, however you want to put it. I think it's a really remarkable piece of software that's really going to help you look at dozens of markets, whether it's stocks, multiple markets on the Forex, futures markets, and be able to alert you to what's really the low risk, high reward trading opportunities. Now let me just unfortunately have to walk you through this disclaimer that this is for educational demonstration purposes only, and that we're not certified commodity certified trading advisors, and that you should never risk more than 2% of your account on any given trade. Do your own due diligence and consult a financial advisor prior to making any trading decisions. With that said, just a little about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia. I published close to 15 peer-reviewed articles in first-year journals, and I have been involved in the financial markets for over 20 years. And what Right Line Trading is really is a product of a decade of analysis of price action, market structure, and indicator algorithms. And what we really do here is mathematical modeling. We look at each individual financial market as a closed system that is governed by certain forces. And these forces are what determine the future movement of price on any given financial instrument. We determine what those independent variables are. We put them in a multivariable equation and we optimize them. And through this method, we are able to predict the future movement of price on any given financial instrument with a lot of accuracy. We're one of the fastest growing trading systems on NinjaTrader. And what I'm going to do in the next hour, and I put it in red, but it is the truth, is I'm going to show you how to find 4, 5, or more low-risk, high-reward trading entries on either the futures, Forex, or stock markets, or if you day trade options, you're really going to get excellent options positions. And you're going to get these all in the first hour of trading. You're not going to have to sit around and watch a couple of markets and wait for an optimum trade entry to hit. Now, 95% of day traders fail, and that's because they really use standard indicator analysis. They use oscillators, they use MACD, they use Fibonacci. All of these things simply do not work. We've done the math, and the trading entries that they trigger are very, they're poor. They have no precision, and they're not independent variables. They don't predict the future movement of price. They are moved by price, and that, and traders just consistently use them, and that's why such an enormous number of day traders fail. They don't continually evolve in their technical analysis and discard things that simply don't work. Now, oscillators do not work. It doesn't make any difference what the oscillator is, whether it's relative strength, Williams K, stochastic. An oscillator is moved by price. You know that a market can stay overbought for a very long period of time. Oscillator divergence is an indicator that's overrun all the time. If you use an oscillator, all it's going to do is decrease the precision of your trading. And MACDs don't work either. The fact that a MACD is crossed over to the upside in no way predicts that price is going to continue to move to the upside. The MACD is moved by price. price does not move because the MACD crosses over to the upside. Now, Fibonacci, I really consider to be an immense hoax. He was an 11th century mathematician who created Fibonacci transformations, of which gave rise to Fibonacci numbers, and they're really elegant, and they do have a certain symmetry, and they do describe certain phenomena in nature. But to think that for some reason they're going to predict a future movement of price on a financial instrument that wasn't around and will not have been, hadn't been invented yet for 800 years is really absolutely absurd. I don't know who made this jump in taking Fibonacci from simply math theory to this practical application, but whoever has done, who did it, it just really does not work. Now, Gann theory, I have books on Gann theory. It doesn't work. Now, rising and falling triangles, as if you're a pattern trader, work some of the time, but they don't have the precision to get you to where you need to be. Pure price action alone works some of the time. Again, but it doesn't have the precision that you need in order to create a profitable trade strategy. Now, momentum breakouts fail 70% of the time. And these are what a lot of these stock rooms look for. They look for momentum breakouts on small biotechs. 70% of those breakouts are going to fail. Now, there are two keys to there are two core trading principle keys. And we're going to show you that the Trade Analyzer allows you to spot really low risk, high reward entries because it monitors the true forces that govern the future movement of price. And I'm going to go over each one of those one at a time. And it also gives you an audible and visual alert. So you can, if you're looking at 50 different stocks, you don't have to have the chart open until the Trade Analyzer fires a signal, and then you can open the chart. Now, here's what it looks like. Now, this is an analyzer looking at Apple, CVS, Snapchat, Home Depot. I forgot what CNI is. I think it's the Canadian National Railway. Alibaba, Applied Micro Devices, Target, Optical Kinetics, and Palo Alto Networks. You can see that each one of them projects multiple colors. And what you're looking for is this alert. And this alert will occur when you get all blue or green, or you get all red or tan. This is all that you have to be concerned about. And when this alert fires, it's going to tell you that there is a low-risk, high-probability trade approaching. Now, what the Trade Analyzer looks at is the multi-time frame analysis of trend, which is really key. It looks at the multi-time frame direction of correlative markets, which is essentially money flow. It looks at the multi-time frame analysis of order flow, the multi-time frame analysis of momentum, and the multi-time frame analysis looks at market profile, leverages volume. Now we're going to go over each of those independent variables one at a time. Now what the analyzer does is it looks for a multi-time frame alignment of trend. And as an independent variable, I consider this to be the most powerful. If you're trading a 3-minute, the analyzer is going to look at the 9-minute and the 27-minute, the two higher time frames. If you're trading an 8 range, it's going to look at the two higher fib numbers, a 13 range and a 21 range. If you're trading a 377 tick, it's going to look at the 610 tick, which is the next highest fib, and the next highest fib after that. And what it's going to look for is for all 3 time frames to align your trading chart along with your two higher time frames. And it does so in a really elegant way so that it tells you actually even more than just the trend. Now, initially, the trade analyzer is just white. There's nothing here. Now, when bias goes red, this is a 5-minute of Facebook, it tells you that you have that multi-time frame alignment to the downside. I want to show you how that is represented on the charts. Right here. Now, what this means, when you look at the background bias of most charts, when price falls, the background goes pink or green. In this particular case, this indicator is not looking at your trading chart, it's looking at the two higher time frames. And it's looking at direction of price, it's looking at a 50 simple moving average, 50 period, and a 15 period moving average. Now when the 50 is red and sloping down, when the 15 is red and sloping down, and when the 15s cross the 50 to the downside on both higher time frames, and price is below the 15 and the 50, which means all support has broken, this background goes pink. And it doesn't look at price on your trading chart. But when your two higher time frames align to the downside and support is broken on your two higher time frames, and the 50 and the 15 period moving averages are sloping down on your two higher time frames, and the faster moving average has crossed the slower to the downside on your two higher time frames, price on your trading chart is almost always going to head down. And that's what sets this light off, this color. You have a multi-time frame alignment, and this is when you get a tremendously powerful directional bias. The system knows it can only take a short trade. And here's just the opposite. Here I put in the 15 and the 50, but this is on your trading chart. This is Amgen, and I made this slide yesterday. But what this is doing is looking at the 13 and the 21 range to give us this green background and to give us this entry to the long side. The analyzer is going to fire, and you're going to get this long entry. Now, this is just one independent variable. We're going to go through each one individually. Here's another short trade. Same stock, Amgen. Background bias, 50's red and down, 15's red and down, and the same is present on your two higher time frames. This is a very low risk, high reward trade. And on 10 ticks of risk, it's an 8 range, you make about 45 or 50 cents. It's a 5-to-1 risk to reward ratio. Now we're going to look at the multi-time frame analysis of correlative markets. And this is what shows you the direction of money flow. When that occurs, 3 more lines go red, or they're going to be all green, or they're going to be all mixed up, in which case you're never going to get a signal. Now these are these 3 lines, and I've added it to this chart on Amgen. And what these are stocks or ETFs which correlate in either the same direction as Amgen or in the counter trend direction as Amgen. And there are 9 of them. There are 3 in each line. Now, if they correlate in the same direction, that's the direction that money is flowing. If they correlate in the counter trend direction, that's where money is coming from. And there's actually a website that gives you markets that correlate in the same direction and in the counter trend direction. But we've done a lot of analysis and we figure out our own, and they correlate very tightly. 70% of the time, they either move with Amgen or in the counter trend direction. And this is simply a measure of large institutional traders rotating their money from asset class to asset class. If you realize that in the course of a day, there's really pretty much a fixed amount of money. And when one stock goes down or a stock goes up, or the NASDAQ goes up or the NASDAQ goes down, it's simply the institutional traders rotating their money from asset class to asset class. That's all it is. And this is what tracks the direction of money flow. So now we have two independent variables. We have the multi-time frame alignment of trend and an indicator that tracks correlative markets or the direction of money flow. And here's another example. Green, green, green. This is Apple. Up you go. These are all yesterday. This is all price movement yesterday. This is on 10 cents of risk. You make about 55 cents. It's a 5.5 to 1 risk to reward. Here's Best Buy, same thing. Now, we have a 15-period proprietary moving average, which is very important. It's a combination moving average and ADX-ADR indicator. Now, ADX-ADR is a measure of volatility. You know, you want to trade a volatile market. You don't want to trade a market that is quiet. And you want to trade a bumpy market so you can get the big moves. Now, this 15-period proprietary is tracked on line 15. And when it's red or green, it tells you that there's excellent volatility present, and it gives you the go-ahead to trade. So, without this line, this is the proprietary 15 being red and heading to the downside on your trading chart, you will not get a trade trigger. And this, if you notice here, it's yellow. When it's yellow, it means that volatility has dropped and the market is potentially just in chop. That's when you don't want to take a trade. The lowest risk, highest reward trades occur when the modified 15, as we call it, or the RL trend, is heading down and is red. That's a fundamental component of the trade analyzer. We're looking to get you the lowest risk, highest reward entries. The goal of the analyzer is to protect your capital and only get you into perfect trades. And when you can stack up 100 of these, the one thing that you don't want to accrue on any given trade is risk. And that's what the analyzer looks to avoid. Here's another trade. 15 must be green for a long. That was CVS. Here's Applied Materials. This 15 on entry must be red on a short. Once it goes yellow, the system will not trigger you an entry. Now, what happens when forces that govern price movement don't align. This is really key. I'm going to show you. Here's a market where you have no background bias. It's Expedia, and it was yesterday. The correlative markets are all different colors, yellow, and look what happens to Expedia. It's all over the place. There's no low-risk trades on the chart. And this is what happens when those forces don't align. That's when the market tends to move and chop. Now, the simple fact is that in order for all of these things to align, there needs to be a significant flow of institutional money into Expedia. When there is no flow of institutional money, Expedia is going to do what all stocks and all financial instruments, for that matter, want to do, and that is chop. That's why it's so key to track the flow of institutional money, because that's what creates that multi-time frame trend, provides the market with enough volatility or a red modified 15 to take a short, and creates everything we need in order to get a low-risk trading entry. Now, finally, not finally, but now there's volume. Now, the analyzer looks at volume and projects it for you. Now, it doesn't do an analysis of volume, but the reason we put it on there is to make sure that you can see, even if the chart is folded up, that the market is turning enough volume for you to take a trade. Now, inside the analyzer's algorithm, we don't have a color for this on the front of the dashboard, is an assessment of momentum and order flow on a multi-time frame basis. These are additional independent variables that must align in order for you to get a really low risk, high reward trade. Now, there's lots of ways of assessing momentum. You can use an oscillator, you can use a MACD, but what we do is we use a modified Fibonacci formula. Now, when the line is red, momentum is down on your two higher time frames. When the line is green, momentum is up on your two higher time frames. On the bottom line, when the line is red, order flow is down on your two higher time frames. When it's green, order flow is long on your two higher time frames. Now, all order flow does is assess market depth and determine whether there's a predominance of buyers on the dome or predominance of sellers. Now, it creates a delta, and then the assessment is made by a 15-period moving average of the delta. So when the delta is red, it tells you that the 15-period moving average is reading an overabundance of sellers. So there's selling pressure on the financial instrument, which is real important, because this, in a way, also assesses money flow. When institutional traders come in and want to pound down a financial instrument, there's going to be a significant overabundance of sellers on the dome to drop that price. Now, here's what happens when these instruments align, or when these forces align. The price of your stock is going to rise. And remember, these are not looking at price. These are being assessed by your two higher time frames. So price rises because these are green. These are not green because price rises. That's very important to understand. And here's another one. Green, green, price rises. Now, I don't recommend taking counter trend trades, but if you're going to take them, you have to wait till order flow and momentum turn. If you don't, you're going to get run over by the trade. And if you don't take a long trade here, and you see how all these traders are caught in the counter trend direction, they all get run over, you're in trouble. That's why the dashboard or the trade analyzer looks at the direction of order flow and momentum, and it does for another very specific reason. Look what happens when these two forces don't align. Here the upper line is red, the bottom line is blue-green. They're two independent forces that are aligned in the opposite direction, and so the market chops. So you don't want to take a trade unless the analyzer is telling you that your two higher time frames are either aligned to the downside or aligned to the upside, and definitely not when they're juxtaposed. That's why you'll never see an alert unless order flow and momentum are aligned on your two higher time frames. Here's the same thing again. No alignment, chop. Alignment, long. And here's a little more of a prep. Now we have market profile. The analyzer will look for areas of support and resistance and avoid them. Here you can see order flow. This is just looking at order flow. The only thing you can do is trade short on break of support. Cannot go in any other direction. Order flow and momentum. Order flow is long. You can only trade long. When order flow is red, you can only go short off a resistance here. That's what the dashboard is giving you. The appropriate direction to trade. Trading again in a counter trend direction to this analysis is really going to get you into big trouble. I trade the markets live every morning in the live trading room, and I never trade against order flow and momentum. I have to have them in my direction. Now, this is another analysis that's done that we just added to the algorithm. And it's really an innovative one that you never can, I don't think you'll see this any place else. Now you can use these if you're trading the futures markets or you're trading the stocks or you're trading stocks. And what we do is we look at 16 indices broken into 4 groups. Now these are the 4 groups: the Dow, the NASDAQ, the S&P 500, and the Russell. 8 are volume-based, and 8 are tick-based. And here's how they look. And these are some of the things that they look at. What they do is they look at market internals for you. You look at the ratio of up volume to down volume. Look at the ratio of the advance to decline line. You look at the ratio of stocks upticking to stocks downticking. They look at advanced declining issues in specific ETFs, like the semiconductor index for certain stocks, depending on which stock you have. You have to dial in the right cash metric. It's very easy. And what they do, these are some of the metrics. These are all market internals. And we put them on your dome for you. And they're analyzed by the trade analyzer. Now the upper line is all the tick data, and for some reason it just moves faster. And the lower line is all the volume data, and it just tends to move slower. This tends to be a more stable line. This tends to be a faster line, but this seems to have a little more predictive power than the volume line. But when these align, when you get dual green or dual red, you've got a super powerful signal for a long or a short entry. It's a really, really powerful. When all 16 market internals align to the upside or the downside, you get a very, very powerful trade entry. These are the lines. This is Apple. Take it all the way up. Now these, I'm going to give you, these are all Trade Analyzer generated entries. Now, hang on one second here. Now this is what happens when you get the alert. It's going to be an audible and visual alert. Get that purple flashing color. It's right in your face. Now, before I went here, I wanted to show you something else. And I must have put the slides in. Whoops. Where did I put it? Hang on one second. Okay, here they are. There's three kinds of entries that the analyzer looks for. It looks for a strategy entry, which is an X. That's a multi-time frame. The X or the strategy entry utilizes a multi-time frame analysis of price action and market structure. You don't get many of them on a chart on a given day because the requirements are so stringent. When it gets this, along with all the other independent variables that we just discussed, it's going to give you a trade signal intra-candle, giving you plenty of time to place your trade one tick below the close of this candle. The other is the consolidation entry. And you can see the consolidation channels that the software is forming. Now, the consolidation signal is also analyzed on a multi-time frame basis to tell you when consolidation is going to break. Most traders have to wait for the next candle for the break of consolidation. The software predicts it. This is going to occur as soon as this candle has moved up a couple of ticks. You're going to get an analyzer alert. All you have to do is put your order on a buy stop one tick above the close of this candle. Now, if it doesn't mature, you don't get in. If it does mature, you've got yourself a real low risk, high reward entry. And the other is the C candle entry. And there's the A, the counter trend B, and the continuation C. Now the C is an engulfer, and it engulfs all the traders in the counter trend B. So it's pushed down by two forces. One, the addition of new short traders into the trend. Remember, we're trading with the trend in the direction of institutional money. And it also stops all the traders in the counter trend B. So it's pushed down by these two separate and powerful forces. So this is what you would see, and this is applied micro devices, advanced micro devices. Only traded it 5,000 times, can't remember the name of it. Now here's an entry. Right here is all green. Background is green. 50 is green. 15 is green. There's the strategy entry. Now you get 40 cents of profit here on 10 cents of risk. It's a 4-to-1. Now I'm trading a very short time frame chart, an 8 range, or a very short. This is a fast chart. If you wanted to trade a 3-minute or you wanted to trade a 1 hour, you're going to get fewer entries, but your targets and stops are going to be much, much bigger. I'm looking to take a very small risk and looking to get 4 to 5 to 1 risk to reward on my trades, and the Trade Analyzer gives them to me. If you trade 1,000 shares, that's already $400. And this is Perrigo. It's a generic pharmaceutical company. All green, green, 50-15 green, pull back to the value area high. This is 75 cents on 10 cents of risk. Now, 1,000 shares is a lot, but if you can handle it, you made $750. You only trade 100, you made $75, but you're only risking $10 on the trade. That's the key. You need to get multiple trades like this in the course of a day. In fact, as many as you want. It's just a matter of how many analyzers you want to put up. And the fact is, when I used to trade, I traded the Forex for a long time. I traded 12 Forex pairs. The problem I had is that you get 3 or 4 fire at the same time, and you couldn't open them all up and get the trade entries in at the same time. You'd have to pick 1 or 2. And that's what happens if you put in too many stocks. You're going to get multiple signals firing at the same time. And here's Tesla. 65 cents on 15 cents of risk. This is a C candle, offer resistance, 99 cents on 15 cents of risk. Quants, order flow, momentum. Cash metrics right here. And you can see, as long as this background bias was dark pink, light pink is a weaker down bias. I scaled this very conservatively. If you took a little bit more risk, you could have taken Netflix all the way down to support here, and this would have been about a $2 trade on 15 cents of risk. Apple, always with the multi-time frame alignment. Here's Akamai. It's a C candle entry. Again, everything aligned. It's not a huge winner, but the risk to reward is extremely good. Right here, on 7 cents of risk, you would have to get 4 losers, and you still wouldn't even eclipse the money you made in this one winner. This is Wynn Resorts. Now, you can make a lot of money trading low beta stocks like Wynn Resorts, Expedia, Delta Airlines, Bank of America. There's a whole host of them that I like to trade. The risk is extremely low. Now, your reward is still going to be 3 or 4 to 1, and if you get multiple entries, it really starts to add up. Here's Tesla. You're always going to get a bigger amount of money here, 43 cents on 15 cents of risk. And I see a lot of people who trade stocks and have software. They give you the amount of profit, but they don't tell you the risk you take in order to garner the profit. And that's what's really key. I mean, what are you risking to make? What's your risk to reward? And the risk to reward is set up mathematically. You don't take a risk to reward based on what you want. You can only base the risk to reward on what the market's going to give you. When you trade a 13 range, you always take 15 cents of risk. You're in 1 tick below, your stop is 1 tick above your above the, in this particular case, the high of the entry. That's just flat out market structure rules. Now, there's also a lot of baloney out there, excuse me, my French, about how to trade a gap. Now, remember that a gap, there's no way to rate a gap pre-market. And I can give you, I mean, there were 2 great examples today that I can tell you, and I'm going to go to them right now. The gap, I have Google, it's up 30 points. But here's the gap that the 2 gaps I'm looking at that really would have really clobbered you big time. Last night, let me find it. Xilinx, which is a stock that I hold in my options portfolio, reported earnings and gapped down $6. It shot down. Now, that gap is produced by the non-commercial traders like you and me. And you can't value that gap based on small pre-market volume, which is apparently what a lot of people, they rate the gap as an 8 or a 15. They have a 26-point thing or whatever. But what happens in pre-market is valueless, because what happened to Xilinx is as soon as the market opened, instead of rolling to the downside, it tore right to the upside, and it closed the gap because the institutional traders came in and they said, you know, this is just not going to work for us, and we're going long. This is what these cash metrics tell you, and I only use these because these are the keys. These are the market internals. When they're green, you see this Best Buy on 9/12 gap down, but the metrics are green. So you're going to look for a gap up after a move down pre-market and a run to the upside. Now, this is not a trade analyzer trade. This is just another thing you can do with the software that you're going to get as part of this system. And this is the trade of a market open. If the cash metrics align, and they usually don't at market open, because at market open, the market's absorbing all those pre-market orders placed by the non-professional traders, and there's usually a bit of a trade imbalance. But when the market internals are balanced at open, you can trade the open and make an enormous amount of money. This is the way you trade a gap. This is the way you can trade the open. No other way. There's no information present whatsoever prior to market open that's going to tell you whether or not the gap is going to run to the downside or going to fill and blast back to the upside. This is you know what? I made this in September. I don't even remember what CNX is anymore. I'm sorry, I'm embarrassed. But I haven't traded it in a long time. And the reason it's up there is because I have alignment, gap up, and run. And this is a 60-minute. This is not a D trade. This is a swing trade. So if anybody's going to ask me whether you can swing trade this, there's your answer. You can trade a 60-minute, you can trade a 2-hour, you can trade a 4-hour, you can trade a daily. It is irrelevant. So this is just two quick testimonials. I wanted to put in testimonials from people that we knew were real. This is Jersey Tony. He's a top step trader. And he talks about how great the system is. And he says excellent world-class accuracy of right line trading system have made him a very, very lucrative trader. And he is. He's been with us 2.5 years. And this is Trader D. Now, Trader D trades futures, but he uses the same variables that govern the future price movement of any trading instrument. And he was the #1 trader in the country in the $50,000 combine in 2016. That's him, D-M-O-E-R. And he trades our system. And the first paycheck he got was $3,000. When 95% of day traders were going bankrupt, this guy's he went 21 straight days without a loss. It's pretty tough to do. So we look at the multi-time frame assessment of price or trend. We look at market internals in a way that you just can't possibly do it on your own. the multi-time frame assessment of order flow and momentum. We look at, I don't have here cash flow or the quantitative markets. We enter on a strategy, momentum, or candle entry, and we provide you with your own trade execution platform as an add-on that's going to make it much easier for you to trade. And let's show it to you. Now, here's the special package that we've put together for you so you can implement the system. Now, the trade scanner and complete software really are normally $59.99. You know we're going to give them to you for a lot less, but that's the normal price. Now, we're going to put you in my trading room for 3 months for nothing. That's normally $3.99. And I'm going to show you how we trade. So listen, you not only want to have a great system, but you want to learn. And I'm going to teach you our system and our trading methodology. 2, you're going to get this. This is for life. I put 3 months. It's a mistake. It's the trade execution platform on a lifetime basis. All you have to do to get the same trade I do is press buy and up close, sell it down close. Excuse me. I'm sorry. We reverse on. We go out on a reversal candle. This makes trading incredibly easy. It's a patent-pending tool, and if you trade time or tick, when that candle closes, it gets you in with lightning speed. You don't have to rush in there to try to get the trade. Now, let's skip that real quickly. Now, total access to our video tutorial library, and that we have like 400 videos. So these are the bonuses. You get the 3 months in the live trading room. Now here's the permanent license for the NDT, and it's $1,500. All of our video tutorials, and to the first 5 orders, we're going to put you in our 10-module weekly didactic live trading session. I did module 1 today at 1 o'clock, and we have a really nice audience. We had great questions, and I am teaching you, right now we're teaching how to read price action. We're not going to any system or software generated entries. We're learning how to day trade from the ground up. First understanding how to trade price action, then price action and market structure, then price action, market structure, and trade confirmation with one of those 3 entries, strategy, C candle, or consolidation. The dashboard follows all of these on as many instruments as you can follow. What I do when I traded the Forex is I folded them all up, and when I got a scanner alert, I opened up the market, saw the trade maturing, pressed my NDT to buy an up close or sell a down close, and that was it. Now the price is $29.99, or 2 payments of $15.50, and the first 5 orders get the 10-module educational series thrown in. And really, these are serious questions. I mean, do you think it's worth it to you if it makes you a profitable trader? And there's no reason why it shouldn't, because these entries are stellar entries. I mean, if you trade 3 or 4 instruments, 3 or 4 stocks, it could take you hours to find one. But if you put up 15 or 20 of these, you're going to get multiple entries in a given day. And isn't it worth? I mean, it is worth the price of your financial independence. And obviously, it comes with a lot less stress, and it should make you profitable. Now, this is our web address, rightlinetrading.com. Our email's info@rightlinetrading. Here's our phone number, 786-713-5276. And let me see if there are any questions. So if there are, I'll answer them now. Okay. All right, everyone. Well, listen, everyone have a really, really great afternoon. I really appreciate everyone for coming by. If you have any questions, we'll be here for a while. Feel free to give me a call and ask us any questions you have or send us an email. So listen, everyone, thanks for coming in and have a really, really great evening. Take care all. Bye-bye.